share the agenda real quick again. We're up with the next company presentation. Paul Westels will be joining us here in a few short seconds. He's president and CEO of Western Copper and Gold. Company just signed or recently signed let me rephrase that. Rio Tinto recently invested into Western Copper and Gold, and they just put out a PA yesterday. So it's super timely to have Paul on, and I'm excited to hear from him. And then we got Brixton Metals, Pacific Empire, Group 10, Electric Royalties, and then we'll close with our closing panel, which I'm also really excited about. So stay tuned for much more information. Paul, thanks for joining us this morning. It's great to welcome you on stage here.
Thanks, Kai. It's great to see you. It's been it feels like it's been a long time. It's certainly been a long time.
Too long.
Person, but it's great to see you again. Yeah.
Likewise. Please start sharing your screen, and we'll dive right in.
Yeah, sounds great. All right. Well, thank you all to all your listeners for coming in and listening to me. So I'm Paul Westels, the president and CEO of Western Copper and Gold. Western Copper and Gold has one asset, which is the Casino Copper Gold Project, which we've been developing for over a decade. But as Kyle alluded to, it's been a really exciting couple months. Well, month actually. We brought in Rio Tinto as a strategic investor. We released a PEA yesterday, so I'm going to talk about all those things. I'll be making some forward-looking statements, so please review this before making any investment decision. So to kick off, just a little bit about the corporate structure. We trade both on the TSX and the NYC American. I always like to tell listeners to make sure that they look at the NYC American. That's where most of our trading happens right now. We did an equity raise in November, and the strategic investment from Rio, we closed that 3 weeks ago. So combined, we've got about $52 million in the bank. That's more than sufficient for what we want to do this year, next year, and really almost everything we need to get this project shovel ready. Share price has been close to 275, gives us a market cap of around 400 million. Shareholders, obviously Rio with their investment, a couple of big US institutionals that came in the November financing, and then our founder Dale Corman and Mike Vuitton, who assembled his position last year and became a director of the board mid last year. So to sort of kick off, talk a little bit about the Rio Tinto investment. From a high level, it's fairly straightforward. They gave us $25.6 million for 8% of the company. But the real interesting thing is in the investor rights agreement that we signed with Rio. So if we look at that investor rights agreement, the key part of that investor rights agreement is a scope of work. And this scope of work is looking at examining the resource and looking at the metallurgy, geotechnical aspects, community, First Nation. I mean, the way to look at this is really a second level of due diligence. And in order to make sure that that all happens and that both parties are happy with that, we've agreed to set up a technical committee. They have an observer on the board. They're seconding people into the project. So, and importantly, is that all of this is only in place for 18 months. So really, we've got 18 months with Rio to make them understand the project, and then we'll sit down and see what the next step is. But as Rio has pointed out to me, their long-term goal isn't to own 8% of Western Copper and Gold. It's to add to their copper gold project pipeline, and obviously they see something special in Casino, which hopefully I can convince you is something special as well. So some high-level points here. So Casino, one of the largest copper gold projects in Canada. I'll be talking about the PEA and just talked about Rio Tinto. Located up in the Yukon, love being in the Yukon. The Yukon has really moved from an emerging mining district into a real mining district, 3 operating mines at this point in time. And then we as a company continue to add value, new resource last year, new PEA this year, and then moving forward, moving into a feasibility and then back into permitting. So the resource itself, in total, we're looking at 21 million ounces of gold and 11 billion pounds of copper. So very large on both the copper and the gold side of things. So if you look at the contained metal in the ground, you've got about 40% from both gold and copper, so very even with those, and then a little under 20% with moly. And I don't talk a lot about moly, but moly is a significant component of the value of this deposit. Couple of comps on this. If you look at just the copper, we're about the size of Rosemont in terms of copper equivalent. We get to look very similar to SolGold's Cascabel in terms of overall size. This is from the copper perspective. If we move to the gold perspective, with just the gold, we're bigger than Metades. We're about double the size of Living Gold. Again, very similar to SolGold's Cascabel. And then again, on gold equivalent, we're actually bigger than Donlin. So a way, one of the takeaways I have when I look at this is that similar size, similar grade to SolGold's Cascabel. We're in Canada. We're a big open pit. They're in Ecuador, block cave. We certainly have we're about half the value of them as a company. So I'd argue we're a better investment decision at this point in time. Okay, let's talk about the project. So PEA is released yesterday, and pretty excited about this. This is the first update of the engineering since we did a feasibility study in 2013. So these are all really, really fresh numbers. We looked at developing this as a two-phase project. The first phase is 25 years, and then after that, we need to build a secondary tailings facility, and that goes into the second phase. But most of the good economics are in the first phase. So with that first phase, we're looking at a 2.3 billion net present value, an after-tax IRR of 20%, strip ratio, and I'll come back to this. This is one of the secrets, one of the keys to make this project as good as it is the really low life of mine strip ratio of 0.4 to 1. I mean, that's a sort of best in class strip ratio, and that results in a very good payback in 3 years. When we look at the full two-phase project, we're up to 47 years. You added 22 years of additional mine life. So, I mean, we already have identified close to 50, half a century of ore here. And if you look at the life of mine cash flow, and this is after you've paid back all your capital, you're looking at 12 billion. So I think it's fairly easy to see why Rio is interested in a 50-year mine life and $12 billion of cash flow over that period of time. So what's changed with the project since the 2013 feasibility study? We've incorporated a number of new things. Primarily is the new resource that we came out with last year. We've also increased the heap leach gold recovery. We've incorporated the access road funding from the government, and I'll talk a bit more about that. Moved an airstrip. But the key thing really is related to the tailings management facility. And so the tailings management facility, a couple of years ago, we did this study with the First Nations, YESUB, which is the regulatory agency in the Yukon government, where we looked at all of these different options for tailings and mine waste. It started with 385 options, narrowed that down to one, and what you're seeing here is the final sort of agreed upon options. So, and just to spend half minute here about what's going on here. Really, what this is designed to do is to absolutely be the safest facility in terms of any potential discharge to the environment. So we, of course, have our main embankment. Behind that, we have inert tailings. Behind that, we have a waste rock, which acts as almost a secondary embankment. Behind that, we have the PAG tailings, which is the material you don't want to release to the environment. We then cover it not in water, but actually with a non-acid generating tailings cover. And so all that's been incorporated in this new study. And this is critical as we're looking at taking this project and moving it back into the regulatory process and getting it permitted. Looking at the resource itself, you can see everything here in blue is ore, everything in brown is waste. And this shows the phase 1 pit here at 1.3 billion tons, and this shows the phase 2 pit at 2.3 billion tons. Everything in orange here at the very top is the heap leach resource. That gets mined off first, goes onto a gold heap leach, provides about 80,000 ounces of gold per year. But the main value is down here in the main part of the deposit, and that's 2.2 billion tons at 0.36. Now that grade, may not sound like a super big grade, but what's sort of key here is this core zone in the middle of the deposit. And this, as I'm showing here, is greater than 0.5% copper equivalent. This is where mining starts. It's absolutely key to the good economics of the project. And you can see this when we start to look at the grades that come out of the mine. And so if you look at the first 4 years, 173 million tons, the average grade over the first 4 years is actually 0.72 copper equivalent. Then the next billion tons here is around 0.5, and then the full 2.1 billion tons comes in around 0.4. But if we look at mines in the area, and so these are some of the older mines just south of us in British Columbia, Copper Mountain, Gibraltar, Highland Valley, they're all running 0.2 to 0.3. And then some of these newer mines are running, around 0.5 to 0.6. So we're right in line with the mines that have been operating and some of the new mines in British Columbia that have come online. Access road is key. You guys might recognize some of your listeners might recognize these guys. That's the Prime Minister of Canada. This guy behind him is the Premier of the Yukon. This is a couple of years ago. They announced a major road funding in the Yukon, a number of roads to mining projects, and one of those roads was the road to the casino project. And if you break that down, this is a 200 kilometers of road. The government is now committed to 100% funding of the first 100 kilometers and 30% funding of the next 100 kilometers. So that's now been incorporated in the PEA that we have. A little bit more about infrastructure. In terms of supplying power, we're looking at trucking in liquefied natural gas from Fort Nelson. This is exactly what the city of Whitehorse is doing. That's what the Silvertip mine, which is a small mine operated by Coeur right on the border between the Yukon and BC, does as well. In terms of concentrate and shipment of concentrate, we're looking at shipping that through Skagway. That's 560 kilometers away. Again, nothing new here. The Minto mine, which is one of the 3 operating mines in the Yukon, does exactly that. They ship right through Skagway, copper concentrate, already a facility there to handle that. A bit more on the economics. So, the base case, $3.35 copper, $1,600 gold. As I pointed out, and when we started, that gives us a 2.3 billion net present value and 20% roughly IRR after tax. The other key thing here is the net smelter return. So this is, what is the average value in a ton of ore? Well, our average value in a ton of ore is around $30 per ton. Our operating cost is around $10 a ton. So you can see very nice margin on the project. A bit more on the economics. I mean, that's the base case. If we look at where we are closer to now, closer to 450 copper and $2,000 gold, at 450 copper, we add about 1.3 billion in net present value. If we go to $2,000 gold, we add about $700 million of value. So at spot, we're probably looking at adding another 2 billion to this 2.3 billion. And so we're sitting likely closer to around $4.5 billion in terms of net present value. And then similarly, a relatively high IRR on the project as well. Capital coming in at 3.2 billion. So this is up really since 2013, but really most of it is due to the US Canadian exchange rate. When we did this in 2013, it was 2.5 billion US or 2.5 billion Canadian because the currencies were at par. If you look at this in US dollars, it really is very similar to what we had back at that time. Cash costs, if we look at cash costs, I mean, this is a project that really shines when we look at cash costs. Cash costs are negative $1.13 per pound. Really, it's just due to the large amount of byproducts and the relatively cheap operation, but obviously is very attractive in terms of a cash cost perspective. A bit about the two-phase project. As you can see, the key thing in the two-phase project is another $1 billion of really a sustaining capital to build that additional tailings facility. The economics look very, very similar, but the key thing here is we treat another 1 billion tons of mineralized material, another 40 million tons of heap leach material. That extends the mill to close to 50 years, another 10 years on the heap leach. And interestingly, the strip ratio still stays very, very low at less than 0.5 to 1.
Paul, I hate to regret this, but I need to jump in here, unfortunately.
Okay. All right.
And but this was hugely insightful. One last question from my end.
Okay.
How much was Rio Tinto involved in the PEA process? Did they have any input?
They did not have much input in the PA process. No, I mean, we just closed the deal 3 weeks ago. So this.
It felt like it was like 3 months ago. Okay, yeah, okay, never mind. I don't know. Everything is a blur these days, so it's fantastic. No, Paul, really enticing PA study. Looks really interesting. What are next steps? Maybe we can discuss that in the chat because we are out of time.
Yeah. Sorry about that. Anyhow, you were on my last couple of slides. Sorry, I saw some beeps, but I had it closed down. Yeah, I mean, so next steps is to work with Rio Hero over the summer to execute the program that we put together with them, and then on the back of that, we're going to be looking to update move the project to feasibility study and back into permit.
Fantastic, awesome, Paul. Thanks very much for joining us. Good to see you again. Let's do that in person very soon again. Very soon.
Can't wait.
Can't wait. Awesome. Thanks, Paul.